saying that inflation is running at rates that are, quote, too low. Fed Chairman Ben Bernanke on Friday set the table for yet another round of quantitative easing for the Fed. Joining us now for the other side of the equation is Peter Schiff, president of Euro Pacific Capital. And Peter, I'm going to go out on a limb and say you disagree with Bernanke that inflation is too low and the Fed should do more QE.
Absolutely. You know, it's scary how clueless Bernanke is. I mean, first of all, to say that inflation is too low. I mean, look what's going on now. I mean, look at what's happening with commodity prices across the board. And every commodity is rallying. I mean, look at corn prices are probably up 60% in the last 3 months. It's 20% a month. Look at a record high in the price of gold, or 30-year high in the price of silver, and look what's happening to the value of our money. The dollar's at a record low against the Swiss franc, a record low against the Singapore dollar, a record low against the Australian dollar, near a record low against the Japanese yen. It's falling against every currency. It's at the lowest it's been against the Chinese RMB, I think, in 15, 20 years. What does that mean? If our money is losing value, that is inflation. As money loses value, prices are going to rise because you need more diminished dollars to buy goods and services. So maybe the government indexes are not showing double-digit inflation just yet.
CPI came in today fairly tame, and I think that gives Bernanke cover to do this.
Yeah,
right?
well, the CPI is a very manipulated index with a lot of distortions. There's hedonics in there and weighted adjustments that the Fed makes. And then, of course, they're going to strip out food and energy and claim they're volatile. When they're not volatile, they just go up.
Right.
But, it used to be that the mission of the Federal Reserve was price stability. Now the mission is create inflation. And the crazy thing is, the reason Bernanke wants to create inflation is he says unemployment is too high, as if more inflation is going to solve our unemployment problem. All more inflation is going to do is make the unemployment problem worse, because now not only are you unemployed, but it's going to cost more for food, it's going to cost more to heat your house, more to drive your car when you're looking for a job. You don't create jobs by creating inflation. The way we can create jobs is to shrink the size of the federal government, to reduce regulations and lower taxes. But the very act of quantitative easing prevents that. Because what Ben Bernanke is saying to Congress is run up the deficits, because I'm going to monetize it for you. I'm going to print money to buy all the bonds you sell. So he is enabling the government to get bigger, which is going to make unemployment worse, not better. So what are we going to have? Even more quantitative easing? You're throwing gasoline on a fire.
So isn't the theory, though, that he's doing exactly what he wants to do, which is destroy the value of the dollar? That helps exports, that creates jobs.
It doesn't help exports. I mean, look at the countries that have strong currencies. High exports, they have strong currencies. I mean, look at Japan, look at Germany. The currencies are strong, their exports are strong. We had trade deficit came out yesterday, I think it was $46 billion. It's the biggest in quite some time. The dollar has fallen sharply. It hasn't helped. See, what happens when your currency weakens, your manufacturing costs in many ways go up. Your raw materials costs go up. And ultimately, your capital costs go up. And even if the dollar were to weaken, it's not like we have all these factories that are just standing by that are producing products where we'll sell more products if the dollar. We don't make a lot of things. I mean, what are we going to sell more television sets? Are we going to sell more radios? No, we could sell more We don't make any of those things. We don't make furniture really anymore. We don't make clothing anymore. A weak currency is the equivalent of every American citizen getting a pay cut. Every time the dollar goes down, everybody's wages are worth less. You need more money to buy things. So it's impoverishing us. It's a sign of a diminished, falling standard of living.
So what Paul Krugman would say is, well, the reason the stimulus hasn't worked thus far is it wasn't anywhere near as big as it should have been. It's got to be 5 times as big. And if Bernanke can monetize the debt, then so be it. We're going to put people back to work.
The stimulus will never be big enough for Krugman. That's all he can say is that we need to make it bigger. So you can never disprove him because he's always going to say, we need to have a bigger stimulus. But, what is the stimulus? It's printing money. You can't create economic growth by printing money. Krugman was saying that we need to employ people digging ditches and have other people employed filling them back up again. Well, what good is that? What good is a filled up ditch? There's no utility there. Remember, the problem with our economy is we had too much consumer spending, we had too much borrowing, we didn't have enough savings, we didn't have enough production, and that is not changing. The government is not allowing the economy to restructure, and so we're never going to rebuild the solid foundation, so we can never have real economic growth. All we can do is spend more borrowed money, dig ourselves into a deeper ditch,
and then fill it back up, right?
We're not going to. And all the Fed can think of is create more inflation, as if that's going to be a panacea. What is going to happen down the road, a year or two from now, when the CPI is no longer tame, right? When it's running maybe 5 or 10% or 15% a year, but there's still 10% unemployment, or maybe 12% or 15% unemployment. What is the Federal Reserve going to do? And is the Federal Reserve going to be able to raise interest rates when the government has this enormous debt financed with Treasury bills? What's going to happen when all of a sudden the interest payments on the national debt aren't $300 or $400 billion, but $1 trillion or $1 trillion? What about all these people that have adjustable rate mortgages? Is the Fed going to raise interest rates? I mean, we're in a predicament now, and Ben Bernanke said today that he wants to tell the markets that interest rates are going to stay at zero pretty much indefinitely. No matter how high inflation gets, the Fed will do nothing about it. You know, what is that telling you?
All right, well, we're going to leave it there and pick up another segment. Peter, thanks very much.